Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, across the board here, somewhat of a flat close to end out the week. We had the Dow down 21 points, S&P, look, up fraction, like pennies here. NASDAQ was up 4.5 points. We saw that actually after the selling, we were expecting a little bit more of a bounce, but it just never materialized. So there's still a little bit of issues here with the NASDAQ composite. We'll see those on the charts. Russell closing out the Friday here flat. We saw the crude here hanging out really close to these 52 evens. Again, if you've watched some of our previous videos, you know that that's a critical level for a potential breakout higher in crude. We saw gold recover off of some lows, and then the bonds here actually recovering off of some recent lows as well, pushing the yields down just a little bit. But as always, we'll see all of this on the charts, and we're starting off here with our analysis with the S&P 500s. So folks, as of right now, what I'm starting to see here on the markets and what we've been talking about is a little bit of this a break of this trend line and also a break of some support levels. But what I also want to point out, bigger picture, is while we are in a market uptrend under pressure, which means you got to be somewhat strategic with your trades. It's not an all-out bull market. What I'm seeing is that potentially what this little bit of a pullback might be offering to investors is additional high handles, which are new chart bases. Because what I see here is like a little bit of like potential double bottom. And if you kind of look at this looks like double bottoms with high handles. And we've seen a few examples over the last few days of this sort of playing out. So be on the lookout for potential double bottoms with high handles or just straight up high handle chart formations. Again, uptrend under pressure probably means reduced size. Watch your trades, be a little more strategic. Definitely be disciplined in following your sell stops. But as we zoom in here to the intradays, here's that little bit of a trend line break we were talking about, right? And what we started to look for once we broke those trend lines is a support or a defense, I should say, of support levels, which we are kind of failing at this point. Okay, what I was hoping might happen on Friday is we might be able to pop above some of these support levels. If we zoom in, it'll be a little bit easier to see here. We were focusing in on the 2195s. It was just a prior area of support. You can see here, support. We actually supported here on Thursday before rolling over. Then on Friday, look, now it's acting as a bit of resistance. So somewhat this 2195s, this area is a bit of an issue. I think if you can close above it, say, Tuesday, Wednesday next week, that might set you up for a push higher. But right now, the longer you stay below those 2195s, it starts to seem like maybe the market needs to come back down and test these 2180s. On an intraday chart, you can see why. We're looking at it, resistance. Once it breaks out, becomes support and support here. But also if you look at a daily chart, just drawing those trend lines right across, the 2180s go all the way back to mid-September, early September in this region as well. So again, just watch the S&Ps, watch those support levels. S&Ps are doing a lot better than the NASDAQ. We are actually way above our 50-day moving average. That's that red wavy line down below. And speaking of the NASDAQ, let's move over to the NASDAQ. NASDAQ suffering pretty heavy selling here over the last few days, rejected off the 5400s. And as we zoom into the 60-minute charts, a couple of the things that I had mentioned on previous videos is watch the 5350, see if there's a support, and also the 5300s. Now, the reason that I was looking at those two areas is just because of how we found support prior at those levels, or those levels acted as prior resistance. Now, you can obviously see that both those levels did not hold, which means that the NASDAQ is under some pretty heavy selling pressure. And in fact, for some of you sharp chart technicians out there, you're probably looking at this scenario saying, hey, Matt, that kind of looks a little bit like a bear flag. Some people might call it. We call it like, a high handle in reverse, right? And if you start to see trade below these 5250s, you could see, you know how you have some congestion down here. You could see trade down to the 5150s. There seems to be some prior areas of support in this region. And there's also kind of a gap right in this area too. Remember, this was the post-election gap right here. So folks, just kind of watch this little bit of like a bear flag forming. If you undercut these levels, potentially you could see a further sell-off here in the NASDAQ. Also, another point of weakness on the NASDAQ is that you're already trading below your 50-day averages. technicians out there would understand that this is just not a healthy place for the markets to be in. You'd like to ideally stay above some of your key moving averages. 50-day moving average is one of them. And also, you can kind of see here that when we broke out of these 53.45s in this region here, or 53.40s, I should say, which were prior all-time highs, now that's starting to look a little bit like a failed breakout, and that's never good. Anytime you break to new all-time highs and then you fade down below it, it starts to make the breakout look a little suspect, and that's not good for breakout trades in any respect. So just be careful of that. Nasdaq definitely has some weakness, and in fact, a lot of the stocks that we've been tracking just earlier last week, Monday, they really took them out. And you can see here by Monday and Tuesday, it actually looked pretty good, like a little bit of like a high handle, and a lot of these stocks just came all the way off, getting hit very hard on Wednesday, Thursday, Friday, and now, nowhere even close to being in a chart position or a chart pattern to be able to be bought, right? So you just pass on those ideas. But it doesn't mean that there's no ideas out there. In fact, we'll cover in just a few minutes here some of the trades that we were able to take on Friday. Great trades that are setting up. But we're going to transition over to the crude. So, folks, as we move over to the crude contract, one of the things I was mentioning how it appeared on an intraday, like an hourly chart, how we might have been topping out, but then we had that OPEC meeting, and we rallied about 9.5, almost 10% on the week. And now what I look at as I zoom out of this is there seems to be like a little bit of a resistance here right above like the 5150s. We'll call it just like the 52 evens. And this to me seems somewhat of a inverted head and shoulders, somewhat of a bottoming pattern on a bigger time frame. And for me, folks, the bigger time frames, those are the ones you have to respect more than the shorter term intraday setups. And so as I look at this, folks, it does seem that crude has some upside potential. And by the way, I apologize, folks, these charts, normally I'm able to get a toss data feed in here. Somehow that's not working today, so we're just using a different chart pattern. But you can see here real clearly that crude has had some trouble getting above, like this level that I'm going across is the 5150s. So if we can close above that, I think that crude could potentially have another 25 points to run. And interestingly enough, what you're seeing here is huge volume coming through on the weekly contract here, and also another 25 points or so, which is what the inverted head and shoulders pattern, if we break out and break the neckline to the upside, would indicate, or what it would imply, actually coincides with the 200-day moving average, which is up here at, or I should say 200-week moving average, which is at the 70-60s. So that all said and done, that looks like it might be a potential target up there, because adding 25 points to the 51 current price, it gets you right into the neighborhood of the $70 region. Potentially, that's where you could see the crude. So moving over to the bonds, folks, you can see here on the charts we had a slight uptick on the bonds, so that forced the 10-year yields down just slightly. But folks, just a really, really big pullback here in the bonds. One of the things I was mentioning, or was seeing here during our trading room, let me see if I can zoom out of this just 1 second here. It seems like the bonds are starting to come in on some prior support levels here. Areas we haven't seen since maybe around mid 2015 and earlier in 2014. We could see a little bit of a balance form on the bonds. I mean, obviously you can just see a huge sell-off here in the 10 years. It wouldn't be uncharacteristic for the price movement to somewhat consolidate and figure out if it wants to continue moving lower or if it maybe has a snapback in store. But as you approach some of these prior lows, it wouldn't surprise me to see the bonds kind of just stall out and maybe just go sideways, perhaps until the Fed meeting 2 weeks out from now. But we'll have to see on that. And finally here, as we move into the gold, folks, gold kind of settling out right around the 11, almost at the 1180s, just a few ticks shy of that. One of the things we were mentioning is the 1200 level was that key critical level for us to maintain. So far, we've been trading down below it about 2 weeks now. And if we're not able to stage a rally back above and recapture that 1200, one of the things we've been saying is that I think potentially puts gold in a position, and this is a weekly chart, keep in mind, it puts gold in a position to maybe tag these 1050s down here over the next several weeks or months. Again, it's just looking very weak. A lot of selling coming into gold. And again, if anybody's looking for long-sided gold trades, I think first off you have to recapture those 1200s and then form a balance and try and look for some kind of a breakout at that point. But other than that, folks, the move really is, the move has been so far over the last few weeks in the equities. And speaking of equities, let's take a look at some of the stocks that we were able to actually take nice trades in today. So as we were mentioning, markets were actually kind of poor over the last several days. But that didn't actually prevent us from finding good ideas, and those great ideas came from high relative strength names that were breaking out of recognizable chart patterns on heavy volume. So just a couple examples of this. One of the stocks that we were able to pick up today and have a nice trade in was this CLCD. What you actually see here is it actually breaks out of this little bit of like a handle here. If you zoom in to the 5-minute charts here, you can see how we took this trade. We took it right over the 37s, and that actually was a nice little $1.50 pop in the midst of a market. Okay, let's pull up the S&P 5s in the midst of a market that was somewhat down during that period to sideways. That's again just an exhibition of relative strength. Is that while the market's going down, you've got your stock running up, and that's what we're looking for. Another stock that we were able to take a nice trade in was this EXEL. And first, we're going to start off with the dailies, come back to the intradays. But the dailies were forming this big cup with high handle. Again, another recognizable chart pattern. And when you zoom into the 5 minutes here, what you can actually see is that the 5 minutes has a little bit of resistance here right over the 17s. We took this trade right over the 17s, added to it at the 1737s, and then we just ran it up all the way here. So folks, again, this is, it's a 75-cent move, and you might be thinking, well, what's so great about 75 cents? On a $17 stock, that's a 4.5% move. So really, folks, again, I have to be, I have to harp on this because even though the market is under pressure, right? And people might be saying, well, it's under pressure, I don't want to trade. Folks, you got to stay engaged. You got to look for the best relative strength stocks because there's opportunities out there. And if you're not finding the opportunities, a couple of things that I might suggest is one, get with some kind of a research platform that allows you to screen for stocks that are outperforming either industry group mates or the rest of the market. But two, hey, Easy Breakouts has got a ton of resources to help you identify and learn how to spot relative strength in the market. Those are two great places to start your research. If you feel like maybe sometimes in this market, there's not a lot to do and you're looking for more ideas, those are some ideas to maybe pursue. But other than that, folks, I mean, market sideways, we're pulling back. As I was mentioning, look for high handles to form in your stocks because we are seeing those form on the general market indices, and that could potentially cause a lot of our stocks to form these high handles. We've seen actually high handles breaking out. In fact, a couple of our swing trades here are actually working out nicely from these high handle breakouts, right? So these infrastructure plays have been moving higher. We've been swing trading a couple of these. They've been working out really nicely. So again, just keep watching for these chart patterns. Look for leading relative strength, and then approach the trade as it's taking out those prior highs, breaking out on heavy volume. But other than that, folks, wishing everyone a great trading week ahead, and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.